The goal here is to build a million ounce plus producer, have some growth in the portfolio. And, in the next 2.5 years, we should be able to go past 1 million ounces a year and then, probably go a bit higher than that from our current existing portfolio once we build out the assets.
Welcome to viewers tuning into Assay TV. In this edition, we're catching up with Equinox Gold, the multi-asset gold producer with projects throughout the Americas. And I'm delighted to be speaking with Christian Milau, who's CEO of Equinox. Christian joins me from Vancouver. Christian, hello.
Hey, good morning, Adam. Great to be on.
Yeah, thanks for joining. The Equinox story, it's really one of extraordinary growth achieved over what feels like a relatively short period to be a mining company. Could you give us some background on the company and then also your strategy of how you went from sort of very little to no production up to, nearly 7 mines producing now?
Yeah, no, we've got the 7 now, but we started just over 3 years ago. I guess the management team, we had sort of a vision of building a sort of multi-asset gold producer, and we actually got together with Ross Beatty and Richard Wark, who are two of the entrepreneurs in Vancouver that just had outstanding success over several cycles, obviously, and they wanted to do the same thing, and we're looking for a team as well to get involved. And so we sat down together and we really came up with the vision of building a top 10 to 15 gold mining company in the world, and we said sort of 3 to 5 years. And I have to admit, sometimes you set ambitious targets and they're kind of always ambitious, but we're a long way there after about 3 years. And we went from one single development asset on day one, really, and then we started accumulating assets through M&A, and then building assets and buying producing assets. And now we're at 7 producing mines and 4 growth projects, and several $billion market cap. And it's been an exciting ride, a lot of work, but we felt that the cycle for gold was near its bottom at $1,100-$1,200 an ounce, and that it would probably get better. And I guess COVID last year really gave it a bit of a supercharging in a sense, that it can move very quickly up. But, we wouldn't have guessed we'd be at $2,000 or $1,800 an ounce right now. We thought that would still be a little bit of a longer term goal. So it's been a good ride.
Yeah, certainly. The market conditions are good, and you've got a great board there, with Ross and Richard, as you mentioned. How much does that help sort of the long-term planning and strategy? And also, what are your projections more longer term for adding ounces and adding growth to your projects?
Yeah, I mean, it makes an incredible difference having people like Ross Beatty, particularly. He's our chairman and one of our largest individual shareholders at 8%, and management all own shares as well. And we think long term, and quarter to quarter, yeah, we need to manage the business and try and deliver on results, etc. But really, the goal here is to build a million ounce plus producer, have some growth in the portfolio. And, in the next 2.5 years, we should be able to go past 1 million ounces a year and then, probably go a bit higher than that from our current existing portfolio once we build out the assets. And, Ross has given us that comfort to do that. He's brought in certain supporters he's had over the years, and they've given us that support long-term and said, growth is important, where a lot of companies have kind of gone X growth because they're delivering dividends and cash flow and steady state. But, in our market, it's a depleting business. You need to have some internal growth, or at least spend some money on that. And we've got that in spades. And I think, as the market stabilizes, and we do believe will go up in the midterm or long term here, it's going to be a great place to be, having a bit of growth in the portfolio.
Yeah, absolutely. You think that the dividends, would drive sort of more generalist interest and sort of higher valuations, certainly among the majors, but actually without that growth element, there's some question marks there in terms of valuations, but it puts you in a very strong position that not a lot of other gold miners are in right now.
We probably have the highest growth of any, call it mid-tier to small senior company in the sector. I mean, I think over the next 2.5 to 3 years, our growth is sort of 75 to 80%, which is very significant considering we produce 600,000 ounces already. So we'll be able to break through the 1 million ounce mark organically.
Excellent. Okay, let's look at your portfolio. You're very well diversified across the Americas. That brings some advantages in itself to shareholders, obviously.
Yeah, our goal is also not just to grow, but also to make sure we're in a number of jurisdictions. We wanted to focus on the Americas our shareholders were kind of demanding that and being good mining jurisdictions. And as we all know, the pendulum swings left, right, and differently for each jurisdiction you work in. And in the world right now, it seems to be all becoming a little more tax burdensome and stuff with the recent COVID spending and that. But we've seen that where a couple of our jurisdictions have probably become a little less investor friendly or international investor friendly, and a couple have gone the other way. So it balances out in the long term, and we've been pleased to be in Canada, the US, Mexico, and Brazil. And you get a bit more liquidity in trading, and ultimately probably a wider investor group that likes to have that diversity.
Yeah, indeed. Okay, let's dig a little deeper into some of the actual projects and the near-term catalysts, if you like, for your various projects. First, Canada. You guys have acquired Premier Gold Mines, the Greenstone Project, I think it is. Tell us about the acquisition there and the strategic advantage bringing Canada into the portfolio.
Yeah, before we acquired Premier this year, it was probably the missing link in our portfolio, like a good Canadian asset. And I have to admit, we kind of pinch ourselves and say, wow, we got like one of the best Canadian assets. And, in a way, you kind of go, a company that was our size maybe shouldn't have had an opportunity to do that. But it was a situation where you had two operating partners kind of arguing over the plans and the future for that development project. And there was an opportunity for us and Orion to come in as new partners and really have well-capitalized balance sheets, be able to take it forward. And we ended up buying 60% of the asset by buying a little extra off of Orion. So we're now the operating controlling partner. And we're working with a great deep-pocketed financial partner who's also a shareholder of ours and we know well. So it's much more alignment now. But what we have is a 5.5 million ounce deposit in Ontario, maybe and arguably almost the best jurisdiction in the world. And it's got a 14-year mine life. It'll do 400,000 ounces of gold a year. That puts us in the top 3, maybe 4 once Côté's up and running, gold mines in Canada. So you look at a valuation of that kind of asset and that quality of asset in 3 years' time. I mean, there's a couple out there and they're trading in the billions in terms of value alone. That's what our market cap is today. So we're pretty excited about getting that up and running. And then there's so much exploration and upside, both underground and to the west of that actual deposit. So that will be a cornerstone asset for us for years to come.
Excellent, great. Well, moving down to US then, you're in California. You've got the Mesquite and then Castle Mountain as well, and these are great assets as well. Tell us about any updates there.
Yeah, California's been good to us, and it's always funny. People have views on California as you can't mine in California, but we bought Mesquite off of New Gold. I mean, I originally worked at New Gold. We bought it the first time, and it's been going on and off for 30 years. And it's been a nice cash flow producer. And we paid $150 million for it. It's generated almost $200 million in the first couple of years of operations that we've owned it. And we just keep adding to the resource there. This year, we added 750,000 ounces. And I think what you'll see is you'll just incrementally add to that mine life over time. Maybe not 5 or 10 years in one shot, but you'll add 1 to 2 to 3 years at a time. And it'll just be like the Energizer Bunny. It just keeps going and going. And we're really pleased with that. And it gives us a nice base in California, an operating base. And we were able to leverage that when we were building Castle Mountain phase 1. Small mine, it's only about 30,000 ounces a year to start. We stayed within our permits and the old existing rights that were from the 1980s and 90s when Viceroy operated, and put it back into production. So having a brownfield project, putting it back into production is a lot easier in California. It was well reclaimed. And something that I think can't be forgotten about that project is it's got 2 phases. So it'll have a phase 2, which eventually we'll build after Greenstone. And we just need to amend that permit. And it'll be 200,000 ounces of production for about 18 years. So what a wonderful project in the Western US. And again, the valuation of that type of project is going to be incredible one day. And along the way, part of the thing we got to think about is how do you amend that permit? And we want to be as, call it ESG or investor friendly and NGO friendly as possible when we're doing things. And it's not just because it's California. We actually look at this in all of our sites, but because this is a very topical project, we're looking in our permitting and our applications to be sort of recycling as much water as possible, to be filtering tailings and put them on our leach pad rather than have a tailings dam. We're looking at solar energy sources. We're looking at ways to eventually move our truck fleets to something that's either battery or electric operated, and Cat and Komatsu are moving quickly in that direction with the big players. We'll probably jump on the coattails there when we can, but this thing will be built in, call it 5 years time. So there's a good opportunity maybe then to be quite green with that mine. And, That's part of our DNA. Ross Beatty is an environmentalist and he's a miner, and it is possible to be both, interestingly. I know some people would disagree, but he's going to donate all of his wealth pretty much to the environment and animals at the end of the day. And Equinox stock and Pan American Silver stock are going to be a core part of that. And so in a sense, when we do things, part of our ethos is actually looking at it from the top down and how we can be as environmentally friendly and also be profitable and make money and stuff. And one even wonderful example, it kind of stretches on from California, is in Brazil right now. We've had 6 proposals to move to full solar and wind power for our plant energy sources. It's hydroelectric there, so it's already pretty good. But the good opportunity there is it's fully renewable, and it probably will save us about $10 million a year. I mean, that's just a win-win-win. So, it's really important to us. And I think our people's cost of capital, the miners' cost of capital, will go up if we don't address these issues and look towards being carbon neutral and net zero eventually. We haven't set a target yet, but we're a young company, but that is on our agenda in the next year or two.
Fantastic. Yeah, you touched on some excellent points there, and innovations. It's great to hear about those. Yeah, I was going to mention California, sensitivities, environmental conscious state, but you've sort of covered it off. But it's very, very true and interesting what you're saying around, the cost of capital and this putting yourself in a bracket whereby you're doing the right ESG things and the pillars that the investment community are going to be expecting, as a standard now, or for you to innovate on. The onus is on you. It brings me to another point around ESG, though, less on the environmental and the energy side, just to one of your other mines in Mexico. As we segue onto that, there were some community issues there, but it seems like you sort of transitioned throughout those. Just give us the update on, how you've moved operationally and what you've done with your staff to navigate the other ESG challenges there.
Yeah, and it's a good point. We built this company quickly. I think we've kind of hit all of our metrics and timelines and that. The one disappointment, really, or the major disappointment, has been in Mexico with Los Filos. And ever since we've owned it, I don't even know if we've had one full quarter of full operations where it hasn't been interrupted. So really disappointing for us. And, the market cap's definitely taken a hit because of it. And, part of it stems from there was a COVID restriction by the government at the very beginning of COVID. So it was shut down for 3 months. And then we were investing in 2 new deposits there, an underground and open pit deposit, and the 2 communities that had an influence in those 2 deposits and owned some of the land that we rent. We're really looking for more of the economics from those investments and from that operation. And I think part of it is educating them on that, mine is a complex of different deposits, and you can't be, focused on one solely. You actually move between them, and people have to be fungible, and so do equipment and workers. But they wanted as much of the jobs, contracts, social benefits, et cetera, from each of those deposits individually. And I think we've come up with some reasonable kind of compromises on providing preference to jobs, and we'll give certain contracts to groups that we can, not the big underground mining equipment that has to be maintained and managed by a big underground contractor that's skilled and experienced. And we also drew a line in the sand on certain issues that we can compromise on, like paying off blockaders for their time off work, and NGOs for their advisory fees when they're arguing against us. Those are things that don't encourage good behavior and encourage blockades in the future. And unfortunately, past operators had rewarded that in a way. So we hope that we've set this tone and also said we want to be a long-term partner with you. So we need to invest together and work together. And we're back to work. Business is normal right now. It's a slow process, and I think it'll take us not just 1 or 2 quarters, but a number of quarters to build the stability and trust in each other. And we won't really invest in a significant way until we have that stability again. But we're on the right path now, and I'm optimistic.
Yeah, certainly on the right path, and that's very transparent the way you've sort of turned that around. Okay, let's talk about Brazil. It's been a very successful country for you in terms of projects and the targets you've brought into production. But first, let's talk about the exploration element. You've completed a new PFS and underground study at Aurizona. Could you talk us through what that's done for the project and for the mine?
Yeah, Aurizona is one that is kind of a little personal to me. That was the very first project we got involved in, and it felt very underexplored and had lots of upside and opportunity there. And when it's 1,000 square kilometers, so a huge land package, and we said we'll rebuild that plant. We did it for 160 million a couple of years ago, and it's just been fantastic performer since then. It's generated over 200 million of cash. And in the meantime, we've gone and done this work on the underground and also some peripheral deposits. And we've been able to, just last week, basically put out a study that almost doubles the mine life there, because it started with a 6.5, 7-year mine life. We've actually been mining 2 years, and now we have an 11-year mine life. So really exciting for us to see that vision turn into reality. And that's just the tip of the iceberg. You know, we put out what we know right now. We're actually drilling away this year, and we'll keep drilling over the next number of years. And you're going to see the underground grow a lot more, and we'll probably be there for decades, is our view, as a mine, which will be underground and open pit. But underground is probably a key part of the future. So, you know, I think what you'll see is 130,000 ounces of annual production probably grow with a bit of higher grade underground material to take it over 150,000 ounces. And again, it'll be a long life mine. So exciting times down there.
Yeah, fantastic. Sounds like a super project to be scaling up. Do you have any updates on the other production assets within Brazil?
Yeah, and we think of Brazil having two cornerstone regions or complexes, and obviously one is Aurizona, and the second one is in Bahia State,
Yep.
and that's Santa Luz and Fazenda. And Fazenda is a little old operating mine. It's been going for 25 years, produces 65,000 ounces of gold. So just a nice little cash flow generator. And we'll keep extending that mine life. But 70 kilometers up the road with a greenstone belt right in between the two is Santa Luz. And that's a past producing mine with lots of infrastructure. And it just needed a tweak and a change to the technology. And so we've done that, and we've been rebuilding the mine this year. And for 100 million of capital, we'll put it back into production, you know, and it should be pouring gold in Q1 next year. And that'll add 100,000 ounces of production. So between the two of them, you've got between 160 to 180,000 ounces of production, which balances out Arizona's sort of 130 to 150 really nicely. And again, it's a big land package. We're exploring there right now, and we plan to have some drill results out in the Q4, which will give some indication on what we're seeing in that region. And it's exciting times there as well. And then the final one is RDM, which is in Minas Gerais. It's a bit of a smaller asset too. It's 65,000 ounces right now, but it's been a good performer, and it's been put back into production and actually become a very steady performer in this past year and a bit. And what we're expecting there is to look at an enhancement plan where you can maybe make that 80 to 100,000 ounces of annual production. And you know, we will consider in the longer term with our portfolio whether the two smallest assets we sell in due course as we become more focused on the bigger, longer life assets. You know, and Mercedes and RDM could be those types of assets, but at the moment we're actually focused on improving and enhancing it.
Excellent. All right, not too much time left, but let's talk about your recent funding, if that's all right. You mentioned, you know, you've got a fantastic board. Your insiders recently bought back in some more stock as well. You know, how well funded are you at the moment for all of this additional exploration and all of these additional ounces that you're going to be aggressively ramping up?
Yeah, the balance sheet's in good shape. We've got over $300 million of cash. We've got a couple $100 million available still in our revolving credit facility with our global banking group. We've got good operating cash flow from 7 mines going to 8 next year. And then also we've got about $400 to $500 million of investment sitting in Solaris Resources, which is a copper company we spun out 2 years ago and still own a almost 20% stake in. And we own 30% of I-80 Gold, which is a great little collection of assets in Nevada that Ewan Downey is actually turning into a meaningful potential producer in the next few years here. And between those two of those, we have almost 400 million US, I think maybe 450 million US of value. And like I said, also we may end up selling 1 or 2 small assets. So we've got a good, strong balance sheet, lots of capacity on it. We've also got operating cash flow, and we've got a number of investments that are worth a heck of a lot of money. So, you know, well over $1 billion of, call it, levers and liquidity and access to capital just from what we currently have without tapping our lenders on the shoulder for a bit more, which is something that as well as totally possible considering we've doubled the size of the company in the last year or two.
Yeah, indeed. It's a great position to be in, fantastic growth. One thing we perhaps didn't mention, of course, all your projects are 100% owned, apart from Greenstone, which you touched on before. That gives you, you know, the ball's firmly in your court now to deliver on this growth.
Yeah, and we much prefer to own our own destiny and control the asset. I mean, maybe long term we end up owning 100% of Greenstone, but for now it de-risks a bit of the capital spend and the build of the project with Orion, who's a financial partner, and eventually they'll exit. So there's an opportunity there in the long term, and you know, we'll see how that evolves, and maybe we end up owning it all.
Yeah, excellent. Well, look, we look forward very much forward to tracking the progress on all of the projects and seeing how that goes. So, Christian, thanks very much for speaking with Assay TV, and we'll keep in touch.
Great. Thanks, Adam. Good to speak to you today.
Cheers.